everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit, so you want to manage risk in a way that makes sense for you. And there are some tools we'll go over as we simulate a trade or two maybe that can assist you with your risk management within our WebTrader platform. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our WebTrader platform, which has the advanced functionalities and tools that you'll find in our app as well. And you can utilize the WebTrader and our app both with MT4 and MT5 accounts. So once we log in the upper right corner here, we'll be in the WebTrader platform. Now, we will take a look at some of the technical setups as we get on a chart or two, but starting out, we'll focus on the fundamental news side of things to get a feel for which way the wind might be blowing, go through some strategy ideas with fundamental announcements as well. And in general right now, the sentiment is what I would say cautious. There's some optimism that some of the trade war fears that there'll be some negotiating now between the U.S. and Canada and the U.S. and Mexico, perhaps between U.S. and China. I think that might be last on the table. So there's some fears about that right now, mixed with a bit of optimism that for the time being there's a pause, for example, on the automotive industry with Mexico and Canada, that at least the tariffs on that sector won't go into effect as of yet. So that's some signs of negotiation there, which allowed a bit of a rebound yesterday and even a little bit today. Now we have some large announcements coming. First off, we'll look at the European Union. We've got a rate decision coming. And so we've seen a lot of movement, for example, on the DAX. The DAX 40 has been up towards all-time highs and then down below the open of the day today, looking like a downtrend. And I would suspect it might even bounce back up to the open price again as the rate decision comes in. And so we might even take a look at that chart. Just to see on the German 40, the DAX 40, what I'm talking about before we look at the economic announcements that are coming. So basically right in here's the open price today, right where this support and resistance level is that I drew. We see the movement going up to all-time high territory and then rapidly coming down, testing once, testing twice, testing three times, and then down it went. Okay, and we're currently in a downtrend. I suspect at some point as we get closer to the rate decision, this could come back up just as it was up here and came down, that this is going to find a low point and perhaps come back up towards this open price. So why do I suspect that? Because the rate decision didn't come yet. And the talk and everything that goes with that rate decision didn't happen yet. And so it looks like something that's primed maybe to try and come back up this direction, because there's fundamental news yet to come. So with that said, then we can look at maybe a little larger candles, and we can say if we suspect this will push back up towards the high that it already went and at least break above or to the open price zone that the DAX opened at today, then we can go ahead and set up a buy position as an example. We look at the technicals here. Open price, support level below, all-time high, up above, and without waiting for the announcement, we can say we know there is a large economic announcement that hasn't happened yet. So for the market just to keep running in one direction before we know what's going to be said and what the actual rate decision will be is probably less likely. So maybe it's less likely to break this support down here and more likely to come up and retest the open price. And if that's how you feel, because the fundamental news didn't hit yet, that we would have more of a wandering movement until then, then it would make sense to buy on the fact that we don't know what the fundamental news is yet for sure, although the rate decision tends to come in at the expected level. Now, so sometimes you trade on fundamental news that didn't happen yet if you see the right patterns technically, where you think it will range up and down until the news comes anyway. So take profit would be up here around 23,215. Okay, stop loss maybe down below the low that it just hit if we want to limit the exposure. So 23,080, something like that. 23,070. Okay, just so that it would have to break below the current price. The current low in order to hit. So take profit a little better than risk by a few hundred on that trade size. If I go to a smaller trade size, it'll be maybe the risk level that I'm comfortable with. You see how it risk manages for you. Now I see I'm risking only 358 to make 418. I could go a little larger, risking 450 to make about 1% on my balance. 0.7. Okay, risking about an equal amount. It's going the right way as we're watching it. So if you go into this trade, if I'd have done a little less talking, I could have gotten in with the better price because it looked pretty obvious that this wanted to try and push back up towards the open price. And so as you lay down your technical support and resistance levels like I did here, what you see is many times when you're waiting on economic news to come, you don't break those levels yet because you don't know what the news is for sure yet. So it tends to work movements many times between the support and resistance levels, sometimes crossing one level, but then not breaking the next one, as it did here, and then crossing back down, but not breaking the next level and bouncing back up. Okay, so many times this is the sort of movement you can find yourself with. Obviously, a more ideal entry would have been when it first came off the support level down here, but we were about even risk by the time I placed the trade, even risk to reward for where we have our take profit and our stop loss down here. Okay, obviously a little earlier entry would have been nicer. Now, let's let that go and take a look at the economic calendar. Okay, let's get more specific. Rather than saying we know that there's an announcement coming and it looks like maybe there could be a bit of bounce back one way and then the other way until that news comes in. Let's actually look, what is the news? When is it coming? So today is the 6th. We'll pick that on the calendar here. You can pick the countries you want and the level of announcements you want in terms of importance. I leave the low importance ones off. You can see a slew of data has come in with European nations, also out of China. And now as we move down, we see retail sales came in worse than expected out of the EU, out of the Euro area, I should say. And so already kind of bearish numbers coming in here, which maybe help pull the DAX down, but then this is what we expect to happen in just a couple hours time, the rate cut on the interest rate in the Euro area. And so that tends to be bullish for markets when you lower interest rates because it makes the cost of getting business loans cheaper, home loans are cheaper, car loans are cheaper, credit card use is cheaper as these interest rates are brought down federally. And so the same thing has been done in the US. Since inflation has gotten a little more under control, the expectation here is in the European Union, the same thing is going to happen, a cut on the interest rate. Now, the US still has a further way to go with cutting rates, I think, compared to the Euro area, but we see a rate cut expected. So that's another reason from a fundamental perspective, that dip in the DAX, maybe buying off that support level fundamentally made sense, okay? Because this is kind of bullish news for the stock market in general when interest rates are expected to go lower. Okay, it's all about timing though. The move could have already went up in anticipation of the rate cut, expecting it to occur. But the fact that it went up earlier in the day and has come back down, that was a nice entry point above the support level to see that maybe it'll go back up now. And you're not right every time, but when you feel like the fundamental news is on your side and you got a nice entry point above a support level, okay, then maybe it makes sense to make that trade like we simulated. Maybe our timing was a little off because I was talking quite a bit and didn't get the exact entry, but it's okay. It's for education purposes here anyways. Now, if we use this tool to see, well, what kind of movement do we usually have around the rate decisions? And it's interesting because, as I alluded to before, and we can't put the DAX here, but we can put the Euro USD, and it's similar here. So a lot of times when the DAX is rising, it's because there's good news. And a lot of times when there's good news, you will see maybe the USD weaken because it's a safe haven currency, maybe the euro strengthen a bit, etc. So in any event, let's compare the movements on Euro USD at different time frames after these announcements occurred in the past. Okay, and what we can do is see if we look 4 hours after the rate decisions over the past year or so, none of them came in above forecast. None of them came in below forecast. There's no data for either scenario because they all came in at the expected rate decision. In this case, it's expected to be cut, so likely it will be cut. If not, you'd have a huge reaction likely. Okay, if the rate stayed up, you might see markets push down. If the rate is cut further than expected, you could see a rapid rise in the markets. And so in that case, you could see a rapid strengthening or weakening of the euro versus the USD if it comes in unexpected. Okay, if it comes in at forecast, matching the forecast as it usually does, okay, what we see is 4 hours after the event, 63% of the time up, 38% down. Okay, it's not 75, 80% certainty. It's not what I really like to see, but there's a trend that the euro is weakening in this scenario more times than not. Or I'm sorry, strengthening in this scenario, and the USD is weakening more times than not. Okay, now this is a rate cut. That tends to weaken a currency, right? So it's interesting that even the last couple times here when there were rate cuts, the euro strengthened in the 4 hours after and didn't weaken. Okay, so a lot of times the weakening preemptively happens because you know the rate cut is coming maybe, and then there's a rebound the other way. Whatever the case may be, we see almost 2/3 of the time when the rate decision comes in as expected, matching the forecast, almost 2 out of 3 times the euro goes up against the USD. Okay, if we look in a shorter time frame, 5 minutes after, same thing, 2/3 of them are up. 15 minutes after, 2/3 are up. 1 hour after, 50-50, and then back to that 2/3 or so up after 4 hours. Okay, so pretty consistent rise. It just gets larger as you go longer time frame. 50 pip range movement after 4 hours, and in the first 5 minutes, it was a 9 or 10 pip range movement. Okay, so if you can catch in the first 5 minutes these movements down, the majority of the time after 4 hours, it's up when the rate decision comes in at expectation. Okay, so it's like it alleviates fear and builds confidence in the European Union if the rate decision comes out in where everyone expected it. It makes people comfortable maybe, and so then the USD weakens and the euro strengthens against it. Okay, that's what we see here from the data. Now, we also can look and see shortly after that announcement, jobless claims out of the US. Okay, so this announcement could disturb this movement if you pair Euro USD. So it might make sense to factor the USD out of it if you're going to trade on this and trade on something like Euro GBP or Euro JPY. Okay, so if I go euro yen. Okay, and I say 4 hours after the event. That looks even nicer, doesn't it? And this is why you should search through different currency pairings. And you see, when I look at euro JPY, and this comes in matching the forecast, now it's 88% of the time the euro goes up. And you think about it, the Japanese yen is a safe haven currency. It tends to weaken when people are comfortable and not fearful. And so that would allow the euro to go up easier if what it's paired against tends to weaken at the same time that the euro is strengthening. And so if the rate decision comes in that they cut the interest rate, that makes people happy. So that might make the yen weaken, because when people are happy, they don't rush to the safe havens. And so the euro looks like it more easily climbs against the yen than it does the USD. And now you don't have 15 minutes later an announcement that might strengthen the USD and pull the euro back down. So pairing it against the yen, there are no announcements coming out of Japan after this euro rate decision. Not until the next day, maybe, right? So this pairing looks more convincing to me, and probably the pairing I'd be looking at, especially since there are US announcements right after this announcement. So I think it's a no-brainer when it's 88%. You see the consistency of movement. There's definitely something to that. It's not a coincidence, right? When you have that many data points. And the one that dropped almost dropped nothing after 4 hours. And then you say, okay, that's 87.5 pips movement almost after 4 hours. What happened in the first 5 minutes? Look at that. Look how many entry points you could have gotten down nearly 16 pip range movement, 16.5 pip range movement. And the ones that went up 10 pips on average, and half of them went down 10 or 15 pips. And then look what happens after 4 hours. Everything's up from where it was 5 minutes in. Okay, so very convincing data here on the Euro JPY with the interest rate decision. Okay, here. And so I would have my order window ready if I was going to trade on this. Probably I would choose Euro JPY. You can look at other currency pairings as well, Euro GBP, etc. I like the Euro JPY pairing though because of the safe haven aspect of the yen, working the opposite direction maybe of the euro. And now when the US announcement comes up, you can do USD JPY or GBP USD so that you have a pairing that's not influenced by the euro announcement, and the euro announcement pairing is not going to be influenced as much by the US announcement. Okay, so initial jobless claims. We can take a look and see big focus in the US on jobs. And so as these numbers come in, you might see some predictability as well. And again, we can use Euro USD, we can use USD JPY, whatever pairing that you think shows the best data, and you can search several of them to see which ones create the best predictability. So if I'm looking at initial jobless claims coming in above expectation, that's bad news, right? Jobless claims. That means more people without jobs. What we see is 80% of the time then, the safe haven yen pulls the USD down. Okay, 80% of the time. That's pretty good number, 80% of the time. In the first 5 minutes, as you're trying to get your trade off, it's also down 80% of the time, but only 9.5 pips range movement. And after 4 hours, it's down 71 plus pips range movement, the same 80% of the time. Okay, some of them barely moved, one barely went down, but you also have a range that you could go as much as 92 plus pips if you sold on that. Okay, so huge profit potential, a lot less risk in the other direction in the past when these numbers came in above expectation, above forecast. Okay, and if we go the opposite, if it comes in below forecast, look at the opposite trend, 71% up. Again, near 80 pip range movement. Okay, after 4 hours, majority of them up. In the first 5 minutes, average range movement around 20 pips. So you still have time, and it shouldn't take you 5 minutes to get your trade off if you have the order window ready to go and waiting for the announcement numbers. So after 5 minutes, you should get in with probably under 20 pips movement. And after 4 hours, average range movement over 78 pips. So it's all about entry point. So in the first periods, you're trying to get in at a low point if you're planning to buy based on how the announcement came. And hopefully the percentages work out like the past where the majority of them are up after 4 hours. And so obviously you don't win every time. You see the outliers that went the opposite direction. But if you try this strategy on several announcements that you think the statistics look the strongest each week, and you try those same announcements week after week, month after month for a few months, then you'll have some data to collect to see, okay, which announcements have I been the most successful trading on these percentages? And then you use the ones, obviously, that work out best for you. And I'm pretty certain you can find a couple or a few announcements that tend to bring pretty predictable movements. And you just have to practice with getting the timing of placing those trades at entry points you like after the numbers come in. Okay, so jobless claims, an interesting one to trade on as well. The press conference, it's hard to trade on a press conference. Okay, it's a high-level event, but press conferences, they're going to talk about the rate decision. They're going to say what they think about future monetary policy, and it's not a number that comes in that you can act on right away. It's over the course of 5, 10, 15, 30 minutes. They say lots of different things that moves the market up and down, up and down. And so it's a little harder to trade on the press conference as much as trading on the numbers that come in. Now, if we go to tomorrow's announcements, it's all about the non-farm payroll tomorrow. Once a month, the U.S. has their non-farm payroll announcements. I know there are high-level announcements before that, and they will cause some movement, but there's a lot of wait and see on non-farm payroll day until the U.S. announcements come and the big non-farm payroll announcement comes for the month. Okay, so the movements are a little muted many times on this particular Friday each month when it's kind of a wait and see as those other announcements come in, a wait and see for what are the U.S. numbers going to show, given that the U.S. economy is the largest economy in the world. So non-farm payrolls being what many believe to be the largest, most important announcement each month for that large economy. So the expectation we see here, a slight tick up from the prior month numbers, from 143,000 to 150,000 jobs. Still pretty weak in terms of job growth, 150,000 jobs. Usually we're looking at above 250,000, 300,000 for a healthy economy. So this is somewhat anemic, this prediction, even though it's a small tick up from the last numbers. Now, so already low expectations for the non-farm payroll jobs. What if we pair this? We don't have euro announcements we're looking at here now, so we can pair euro USD, pretty much the most highly traded currency pairing, and we can say, all right, if the job numbers come in worse than, hey, we just won on our German 40, we just hit the take profit. So we saw that pop up. We'll take a look at that in a second. So it did exactly what we thought leading up to the rate decision. The movement pulled back towards the open price of the day, as it's been doing throughout the morning, leading up to the afternoon, kind of trending up, back down, crossing that midline that we looked at for the open price and going above it, back down to it, below it, back up to it, etc. Okay, so back to the Euro USD and the non-farm payroll. If this comes in above forecast, 71% down, and look at the ones that went up. They really didn't go up, did they? Okay, flat. So almost 100% of the movement was down. Technically, 2 of them went up, but almost nothing. So with this announcement, it's pretty clear if these jobs numbers come in better than expected, the USD strengthens. And we're talking a large move, 64 pip range movement. Okay, what happens in the first 5-15 minutes? Half up, half down, range movement, 42 pips. So it moves quick. It's not the full movement after 4 hours, but 42 pips is pretty big. So if I know with pretty much certainty, almost 100% of the movement is down after 4 hours, if these numbers come in above expectation, that's what's happened in the past. So on these occasions, I would be selling from these spikes up, getting my stop loss a bit higher than this 40 pip range, maybe 50, 60 pips, and hopefully I get in 20 or 30 pips up, and then expecting after 5 hours or 4 hours, everything will be down. Okay, that's what I'm looking for. If it's one of the days where in the first 5 minutes, it already shot down 40 or 50 pips, then probably I sit it out or wait for a pullback, because maybe after 15 minutes, you see 3 of them are up again or up further. After 30 minutes, look, the 3 that were up are working their way down. After 1 hour, almost nothing up. And after 4 hours, the progression is completed. Almost everything down. Okay, so you want to get in early on this. If you expect the movement to do like it did in the past after almost each and every time that it came in above forecast. Okay, now if it comes in below forecast, not as convincing, is it? It's 50-50 after 4 hours. Okay, so when it comes in bad news, USD weakens half the time, USD strengthens half the time. I'm not interested in this one, right? So I'm qualifying this one that I'm only interested in trading if it comes in above forecast. That's where I see a better percent probability from the past. Okay, so I would have it prepared only for one direction, and if it comes in above forecast, then I'm looking for my entry points in that first 5 or 15 minutes. Okay, so this is a highly traded announcement, so you got to know what you're doing and get your risk management in. If you know the people who try to place a trade before the announcement or have a pending order, I should say, if you have a pending order sitting, waiting, and if it goes up, you get in. If it goes down, you get it. You get slippage because there's even gapping on the chart in the first minute as those numbers come out. So I don't suggest pending orders right before this announcement. I would wait, see what the numbers are, then see if you can get the entry point you like based on the past statistics, and then manually place your trade. Okay, just a bit of experience that a lot of times if you have a pending buy stop or sell stop pending order just above the price and just below the price as the announcement comes in, you don't end up getting the price you wanted because the market gaps and moves so quick with this announcement that you end up getting a price that you weren't asking for on a pending order. So just be careful with that with these large announcements with pending orders close to the live price. Now, we also can look at the hourly earnings, okay? Again, expected to go down. So gloomy expectations here. And you know, if these do come in below forecast, worse than expected, hourly earnings, euro goes up. If they come in above forecast, 50-50. Okay, this one doesn't convince me as much. Why are the numbers after 5? Never mind. We're looking at 5 minutes, 4 hours. Now I'm convinced. Okay, so average hourly earnings, and that was surprising me that we didn't have as dramatic of a reaction because the hourly earnings are quite a focus because they are a gauge on inflation as well. If earnings are going up and up, average hourly earnings, you tend to have more of an inflation push. If they're going down, less of an inflation push. So average hourly earnings, if they come in below or above forecast, in this case above, we see a strengthening of the USD. Okay, so better than expected news, USD strengthens because there's less likely to be an interest rate cut, is what many people would think if this news comes in too strong. If it's worse than expected, opposite, 100% up. So 100% up with hourly earnings. If they're below forecast, 100% down. If they're above forecast, except for one little sliver that stayed put, but it's the same idea as the non-farm payroll. So if both of these come in better than expected, they both show that the USD strengthens. And if each of them comes in worse than expected, they both show that the USD weakens. That's what the statistics show us. So you might qualify your trade here and say, if this comes in better than expected and this comes in better than expected, in this case lower, right? I'm sorry, higher, and in this case higher. So in both cases, average hourly earnings and non-farm payroll, higher numbers are good. We're not talking about jobless claims where higher numbers are bad. So if these come in higher than expected, both of them, they both show that then the USD strengthens. So if they both come in higher, then I'm selling for sure, right? Based on the fundamentals, if I can get the entry point I like. And the path shows more times than not, you have a good likelihood of winning in that scenario. If one comes in worse than expected and the other is better than expected, that's where I might sit it out, okay? Because if hourly earnings are worse than expected, the USD tends not to strengthen. And if this comes in better than expected, that tends to strengthen the USD and they would work against each other. Okay, these are the two big ones, non-farm payroll and hourly earnings. Okay, the unemployment rate is typically less of a focus, and these two are more of a focus. So because there are such high importance announcements occurring at the same time, I like to see alignment, both better than expected or both worse than expected before I make my trade. Okay, and the statistics show you a strong correlation when that happens. The directionality is very predictable then on the Euro USD, near 100% predictability in the past. Okay. Any questions? I'll pause for a moment. Questions, comments? Okay, and if I see any questions pop up, we'll address them as we see them. Now, I wanted to take a look. We had a trade that just closed. The history here. And so it was this one, the German 40. And we see 479 profit. It's about 1% on my balance. Okay, 543 would be 1%. Almost 500. Just a very easy scalp off of a support level, using the fundamental news to predict the directionality on that, that the support level would likely hold because the big news didn't quite come in yet. So why should it keep breaking important price levels before the news comes? So we expected that it would range back up towards the open price of the day, and that's exactly what happened. So we were combining the technical analysis, price levels, with what we understood about the fundamental news situation. Okay, and so that was a pretty easy trade, and we see the payout. You can ignore these small trades, about 50-50, small in and outs. I was playing with a robot that I'm developing, so I was just testing the algorithm as it went in and out, in and out, in and out to make sure the programming was working right. So ignore all these little trades. It's not my typical trading, but this was the one that we did today. All right, so what else can we look at real quick? We're about out of time, but we could look at what is the DAX doing now, okay? The German 40. And again, we see it's toying around with the open price, okay? We bought from above this support level down here as a simulated trade. Up it went as expected, and look exactly where it stopped. Why did it stop there? That's the open price today, right over here. Okay, so that's a natural resistance level that it went up from today, came back down, sat on it for a minute. You see the wick on the 1 hour candles. It took an hour or so to break through it. And then once it went below, it plunged down to the next support level, then right back up to the opening price. Now, what's going to happen? Likely it's going to sit in this area until the rate decision and the press conference. Okay, so we'll have some movement, don't get me wrong. It could move down a little, up a little, but it's going to toy with this price likely until the rate decision comes in, and then momentum maybe one way or the other way could occur. Okay, I lean towards happiness with rate cuts, so maybe you understand which direction I would be expecting maybe this to continue, maybe back towards the high that already hit today before it traced back down, and now it seems to want to trace, waiting on the rate decision at the opening price, and potentially trace back up if the rate decision and especially the press conference is what needs to be listened to, because the rate decision is kind of cooked, right? We expect the rate cut, but then what are they going to say at the press conference? And if they talk, negative, then maybe the DAX drops. If they talk positive, then maybe it goes up, right? But one way or another, it's going to move from this opening price, and you can play one direction or the other here. If it breaks through, pending order up here maybe to buy. As long as it stays below after the press conference, you could look if it starts to pull down the other direction. But I expect a lot of testing in this area and then momentum afterwards with the potential rate cut. All right, everybody, thank you for joining. I don't see any questions that have popped up, so we'll end things here. Good luck with your trading, and hopefully you can employ some of the strategies that we went over today. All right, thanks, everybody. Bye for now.